So let's say we're experiencing these whipsaws with a particular moving average and a particular security we're looking at, and we want to try to reduce that a little bit. There's some things that we can do around that, and that's called we're going to talk about filtering and how to in other ways that we can overcome these whipsaws, and so you're making less trading as far as that might occur on these false signals going above and below the line, in a frequent manner. So let's take a look at that as far as overcoming whipsaws. And as I mentioned, you use filters basically to filter out, and get to valid buy and sell signals and filter out the valid signals from the false signals. That's what you're trying to filter out, right? You want to trade based on something that's a real signal versus something that might be false. And so here's some filters that you can use around that. One is time. So the price has to, you could say, well, and basically have a time rule that says the price has to remain above or below a crossover point for a certain number of periods. And you can decide, 2 periods, 3, 4, whatever it might be. So you can put that in as far as timing, so you're not as frequently trading because you've put in this rule that says, oh, okay, I've crossed the line, but I'm still going to wait 2 days to see, to make sure we don't have a whipsaw here, is the idea of putting in a time rule or a time filter. Another way you can do it is the extent, right? Looking at the price that's crossed that moving average line and say, okay, it's crossed it, that's great, but it needs to cross by a certain percentage. The price has to be either above or below the line by a certain percent, 2%, 5%, whatever the number you want it to be, as far as before I'll take action. Yes, the moving average crossing has given me an indicator. It's a strong indicator, but I don't have that whipsaw action, so I'm going to put in a rule as far as, when I'm going to buy based on how far above or below the line. Also volume. As we know, volume can be a strong indicator on its own as far as really more of a confirming indicator, confirming what's happening. So you might say, okay, for the crossover, it has to be accompanied by a significant rise in volume. Again, higher volume, higher amounts of trading is more of a confirming indicator that what you're seeing is true. So if I see a crossover with very low or decrease in volume, I might ignore it. But if I see a crossover with a lot of associated volume coming with it, then I might use that filter and invoke it and say, okay, I'm going to do that. Or you could put in something like, I want to have extreme sentiment, right? There's an uptrend and I want to really confirm that's an uptrend. So not only does the closing price have to surpass it, but the low actually of let's say a candlestick bar has to cross it too. So like the bottom of the wick, the low part of the range. So not only is the price crossed it as far as the price at the closing of a trading day, but also in the trading range, the very bottom of the wick on a candlestick, the low has to surpass it too. So I'm looking for extreme sentiment that we have crossed this price bar, and that's really a true filter, a true indicator, and we're using this filter to really make it kind of do extra work to prove that it's really true. And then a downtrend, the high would have to, the top part of the shadow, the upper shadow, the top part of the wick would have to cross under the moving average, not just close, but you're looking at the wick and you're looking for it to cross as well in that range in a candlestick too. So I've put some kind of rules around this with these filters, whether it's the time, the extent, the volume, or I'm looking for the whole trading range to cross over, not just the price, to put in more things to make me make a buy or sell a decision based on a trading rule in addition to the crossover to overcome these whipsaws. Now you probably are already seeing maybe a little bit of some of the downside of filters, right? So filters will help with accuracy. You'll do less trading, but they can and they'll help reduce whipsaw losses. As far as, well, again, so you're not frequently trading or trading in the wrong way. You're putting these stronger rules. But filters also increase the lag to an already lagging indicator, which can reduce profits. So if I say I'm not going to buy into something until it's, let's say, 2%, not only cross the moving average, but it's got to be 2% above the moving average. Well, now I've added another maybe indicator or added more lag to it, where I could have bought in sooner, but I want to at least make sure it's above 2%. So I just cost myself 2% in that example. So you can apply these filters based on your trading style and your feelings around risk aversion too. Somebody who has very low risk aversion, really wants to take a lot of risks or whatever, they'll have very low, if any, filters. And others are like, no, I want a little bit more of a perfect setup. And so I want to, I'm going to have maybe more than one filter, maybe another confirming indicator before I make a trade. I'll make less trades that way, but I know when I do, I'll feel a lot more confident on it. So if we look back at this chart again, you can kind of see where these whipsaws come. And you can see if I'm entering into this or I start following this particular security and I say, oh, okay, if I come in at any point and I'm above the crossover line, well, I could be buying, right? I might want to look at other indicators, look at trends, all that stuff. But right now I know, at least as far as in this case, a 50-day moving average, I've got that long stretch where I could have bought at any point of that. And if I bought at the beginning at the far left, boy, look at that nice run up I had in this security just by holding it over this period and then selling it once it came down to crossing below the moving average line. Then we enter into this period of whipsaws, right? You see the sell, buy signals again, going back and forth. And we see us crossing below that last moving average line there where I have the red arrow, and you can see where we're definitely in more of a sell period or don't buy period until at the very, very end you see it kind of cross above too as well. So you can see if we filter out these whipsaws more, then we would have less of that sell, buy, but we might also miss out on its potential opportunities too. So just a way to look at it, but understand that the moving average rule by itself is a very, very good and very strong indicator.